Well, it's a very good morning from him, and of course, it's a very good morning from me. Welcome to my mortgage live stream. I hope everybody's well this morning. So let's just go on air because we can and we should. Summertime now, we're well into school holidays. Things have quietened down, haven't they? New Labour government keep talking about some black hole. I'm quite sure what they're going on about there, but apparently the finances are completely open. But they found a 20 billion black hole, so that's all very interesting, isn't it? So they're going to put up taxes in the autumn to pay for this supposed black hole of finances. So, if you're in the financial advising world, take a look at pensions, contributions, tax relief, capital gains, inheritance tax, all those things are going to be affected. So lots of changes, but that's law. That's the way it works. New governments bring in new laws, and changes mean that financial advisors have to understand what's going on. So in fact, we've got a session today on the history of regulation, which I think you'll enjoy as well. Okay, that's it really. There's not a lot really going on this week apart from that. We've got the Olympic Games, of course. You're into that, big time, which is great for us to, do well on the world stage. Talking about the world stage, let's go straight over to our first session today, which is on the history of regulation. And then I want to give you a sales tip really about your sales process. If you're a mortgage advisor now, or you want to be, what kind of process do you have? What customer journey, we often like to call it as well, is what we're going to talk about as we go along. So let's head over to our whiteboard for our first session for you. Let's pop across there now. There we are. So what I want to do now is just for a couple of minutes, just to explain to you how regulation has changed over the years. And as you can see from my whiteboard, which I prepared earlier, I'm going to start in 1988, which is a long time ago, of course, and we're going to finish up in 2023, actually 2024, just to show you how financial services regulation has changed and where we are now, because there's lots of little conflicting reports and all that sort of thing going on. So let's go right back into time, shall we, to 1988. Kylie Minogue was head of the charts, Bananarama were dancing around, and the world was very different. Now, I actually was in the mortgage sector myself at that time. I was leaving the banks, or the safe confines of the banks, and I went to work for a life assurance company to sell life assurance alongside mortgages. And I remember actually April that year in 1988, it was the Financial Services Act. Let's put that in there for you as well. The Financial Services Act, as it was called. Services Act. It was actually dated 86. It just took a couple of years to get going, really. But I remember going down to London to do an exam on the 1st of April. We had to pass this exam before I could carry on selling endowments to my customers. So that just seemed a long, long time ago. I passed. To my own advantage. So what did the Financial Services Act do? Well, first of all, it regulated for the first ever time the sale of financial services products. And it only focused really on investment-based products, stocks and share-based products like endowments and bonds and unit trusts. It didn't touch anything else at that time because they were the areas that caused more harm and more risk. It did create silos. In other words, it had different parts of the sector covered by different regulators. And if any of you remember names like FINBRA, there you go, Loutro, you might have read this somewhere along in your books. These regulatory authorities, a bit like the FSA now, of course, they only looked after certain segments of the sector. The sector was completely polarized and segmented. And they were fine. It worked well. It was the first regulation, first one ever, of course. Now that carried on throughout the 90s. In fact, it was hardly touched. We had training and competence and things like that came into the 90s, which dominated. And suddenly people had to start passing exams and high exams to become regulated. But the Loutro and the FINBRA carried on. But the Labour government came in 97 and introduced the Financial Services and Markets Act. So I need to put that one around about here. Financial Services, FS, and Markets Act. Slight sort of change, really, isn't it? And that one was dated 2000. New Labour government brought it in. Now, what did it do? Well, it stopped all these different regulators and it created the Financial Services Authority, the FSA, as it used to be called. So it had this one regulator now who looked after the entire sector. It also introduced the Financial Ombudsman Scheme and the compensation requirements as well. That was another thing it brought in, which was great. Over the next few years, it started to take on other parts of the industry. Now, up until this point, it was only investments that were covered by the Financial Services and Markets Act. It wasn't anything else like mortgages or loans and stuff like that. It was only investments, remember. But over time, they started to gobble everything up. In 2004, they brought in mortgage regulation, as you're probably aware, of course. In 2005, they included general insurance, the sale of accident, sickness, unemployment insurance, that sort of thing. In 2007, they brought in equity release. Funeral plans came in as well. So more and more of the industry was gobbled up, if you like, to be under the regulation of the Financial Services and Markets Act. Then, of course, we had the financial crash. So I put that there, 2008. That's a really important date. We had the financial crash, which changed everything. It almost caught the FSA without knowing what was going on. The crash happened. The FSA hadn't the faintest clue what was happening. It was more complicated than that, of course. Obviously, afterwards, the regulator wanted to sort things out, make things better. So they introduced the Financial Services Act. Here we are. Let's put that now. The FS Act. Again, the dates don't matter what they are. The Financial Services Act was 2012. As you can see, 4 years after the crash. But of course, the crash and the credit crunch went on for years afterwards. The credit crunch only really got itself uncrunched in about 2013 onwards. Up until that point, there was no money to lend. So what did it do? Well, it improved the stability of the sector. That's what it tried to do. Remember, the FSA were caught out by the crash, which had a systemic reaction to the sector. It just like dominoes, the whole thing just collapsed. So what it did, first of all, is it brought in this thing called the Twin Peaks, as they called it, where you had two regulators, Twin Peaks. You had the Financial Conduct Authority, which was new, and the PRA, of course, which was new too. And the PRA was set up to regulate. So we had these two Twin Peak regulators. The PRA was designed to make sure banks and the insurance companies were stable and secure, and they had, capital. The FCA was there to undertake observation and authorization of salespeople, advisors. So they call it Twin Peaks, for not much of a better name than that, really. And that was it, really. That's the 2012 Act. Now, a few years later, in 2016, just move forward in time, we had the Bank of England. You might not have heard of this one before. The Bank of England and Financial Services Act. And not a lot of people have heard this one, actually, which was actually dated 2016. It doesn't matter what the date is. So what did that do? Well, not a lot, really. It brought in the Senior Management and Certification Regime, SM and CR, which you've probably read about. It brought that into all the sector. Up to that point, it was designed for the banks. It was brought in, you see, post 2008 for the banks to make sure that people were senior managers were responsible for any muck-ups they did. But they thought it worked really well, so they brought it in for the whole sector. That was brought in by that act as well. The PRA now became part of the Bank of England as well. That was another small change to it, but not a lot of change, really. Then, of course, we had Brexit, which affected everything, of course. And in 2018, we had the EU Withdrawal Act, the European Union Withdrawal Act, which came in 2018. Again, don't worry about the date. But what did this do? Well, this pretty much retained all EU law under UK law. So if I put a little note there for you, it retained all EU law, now became UK law. Now, think about it. Up until that point, of course, the European Union directives and all the diktats that they created, we had to abide by. We had no choice, which was fine. It worked quite well because the whole of the European continent was all in the same playing field, if you like, and the EU created the laws, and we just kind of like went along with them. We did our own to cement the directives and stuff like that. But we were EU dominated under financial services. Now, of course, Brexit came along and stopped all of that. So the first thing we had to do is to keep all the EU stuff going. We couldn't just get rid of it because it'd be a nightmare, wouldn't it? So basically overnight, they made all EU law UK law. So it became UK law. So that's an important change they brought in. In 2021, of course, during COVID, they introduced the Financial Services Act. Another one coming for you. The Financial Services Act. And what this one did, this is quite important, they brought in equivalence. They made it so that anything that we did was equivalent with the EU laws, EU equivalence, they called it. So capital adequacy, for example, became the same as EU as well. So it's designed to complement the Withdrawal Act. The FS Act basically brought in financial equivalence so that we were the same as the EU, because we didn't want to dilute the standards the EU created. We wanted to keep them the same. So that was the Financial Services Act 2021. Now, the big one, of course, is 2023 Financial Services and Markets Act. Here we go. Financial Services and Markets Act of 2023. You might have seen it in your book. You may not have it in your book, depends what update you're. Now, what's this one done? Well, this one's now starting to create new laws. And it's created some new laws which have now replaced several of the EU retained laws. Think about it logically. We retained everything here. We then made equivalence more sort of cemented here. Now we're starting to create our own financial services laws, which are replacing the retained laws that we did back then. So we're doing our own stuff, which was part of what the whole thing about Brexit was, wasn't it? So we could start creating our own financial services rules and laws. It hasn't really changed the world of us, really. It's mainly designed for the firms involved. It brought in new duties for the Financial Conduct Authority and the PRA. So new duties and new requirements were brought in as well, but not a huge amount of change, because the big changes were done back here with the Financial Services and Markets Act. That was the biggest one. Financial Services Act made a few changes, of course, Twin Peaks and stuff like that. So all the rules have come in. We've got training and competence, which was done in 1994. We've got COB rules, which started in 86, MCOBs, which started in 2004. So we've got all the rules are all there, and they all work, don't they? There's nothing wrong with them. But you can see how all these different financial services acts are coming in. And what will happen moving forward, of course, is that we're in complete control now of the laws that we do. And if we want to go one way, we will. But at the end of the day, we do need to be aware that financial services is an international thing. Yeah, okay, you deal with mortgages in the UK, I get that. But international financial services, covers the world. And in the future, China's going to be important. Obviously, Middle East is important. So you have to be international. And of course, Europe's a key part of that player. So we do have to be equivalent with them. You can't just go out on your own limb and do things completely different. That just wouldn't work. So that's a history for you of financial services. And I remember when I went for that exam, I can't remember what result I got, but I was ever so nervous about this exam. But that's a long time ago now, isn't it? 1988. Good grief. Anyway, enough of that. Speak to you soon. Bye. There you go. Hope you enjoyed that. Bit of an update for you on the regulations. We're right in the middle of updating all our materials at the moment, and we've got the new boot camp in now. We've got CMAT 1, 2 and 3 boot camps. They're ready to go. We've got all the new revision guides. They've been republished and they're raring to go as well. All the test packs have been changed. Podcasts have been looked at. A lot of it's evergreen, but we check everything, make sure it's all okay. So we're ready with the new syllabuses. Syllabus or syllabi? I think it's probably the plural. So we're looking forward to a busy autumn as things start to pick up. And of course, next year, when things will get going quite considerably, I think when the Labour government gets themselves established and the market starts picking up, and I think we're on for good 2-3 years of good times. So let's wait and see what happens on that, shall we? Okay, I think on the last topic for you then, which is always one of my sort of skill-based sessions, which we send out to our database on Sunday and Monday nights. If you're not on that, get on it. You get the typed version of the article. Now, this one I'm calling the Sainsbury's Delivery Driver, which seems an odd title, doesn't it? Now, in your sales process, is it fit for purpose? Now, we've had Sainsbury's and Tesco's deliver our weekly shop, since the pandemic, and I've classified the drivers into 3 camps. The first one is what I call a lifter upper. Now, they treat the job as weight training rather than going to the gym. And what they do is they bundle all the shopping, which was in 6 or 7 trays, into 2 trays, extremely heavy, and they lug this thing to your door. It's a bit like weight training for them, isn't it? The second category is the trolley roller. This person, she's much more concerned with health and safety, and he or she will put the trays onto a trolley, which is designed for the purpose, and wheel it to your house. How lovely is that? Number 3 is the one at a timer. Now this person likes the CV, the cardiovascular, and they'll grab a tray from the back of the truck and walk all the way to your front door and drop it off. And they walk all the way back and grab the tray. Now it's a bit tongue-in-cheek, of course, but it's a bit of fun. Now this morning we had a lifter upper. He'd condensed 4 or 5 trays into 2 massively heavy trays and dumped them right on my doorstep. Now, being a typical bloke, I thought, well, actually, I need to try and lift these because this fellow was tough. So, being a bloke, rather than to save face, I thought I'd try and lift these things. Now, I lifted them very slowly and brought them into the kitchen. Now, what's the motto behind the story of these excruciatingly heavy trays? The point is that it suited our driver, not me. He did it for his own reasons. He did it for his own motivation. So is your sales process then fit for purpose for your customers, or is it designed by you for your benefit? I mean, do you insist upon meeting people in an office rather than doing video calls, for example, because it's easier for you? You don't like dealing with tech. Do you do everything in 2-hour meetings rather than short meetings on video? Because again, it suits you. Do you use tech because it suits you? Do you use highly problematic suitability report tech, which spits out a 25-page suitability report that nobody in their right mind is ever going to read? Do you follow up review meetings, or are you just too busy to be able to deal with those things? Now, nobody does this on purpose. My lifter upper didn't either. It's just our system, and we assume that the customer will go along with whatever we decide. The same, of course, goes for my lifter upper. He had a system to suit himself. He didn't really consider the impact it had on the customer. But my wife came up to me and said, "You should have got him to bring them through to the kitchen," she said. It's easy for her to say, she's not a bloke. We need to save face, don't we? Absolutely. I hope you enjoyed that. So that's just thinking about your sales process and everything that goes with that, isn't it? All right, we're going to wrap up now. We're going to look forward to a few days of sunshine. Lots going on this week for us, as we've got a few sessions we're delivering online, keeping nice and cool down here in the studio. We've got some new material coming in, some new protection chapters for our book as well. So lots happening. As always, my friends, if you want to get onto our database, which is here for you, let's put it up for you so you can see that. If you want to get onto our database to get all the updates, I've got a 4-series podcast coming up in August, How to Be a Successful Financial Advisor. You might want to log on to that and ask a few questions if you're thinking about it. And we're launching a new product in September to help you to become a financial advisor. One who can evolve from mortgage advice. You don't have to replace the mortgage advice. You can evolve from mortgage advising into more of a holistic financial advising. So we're going to give you a way in which you can do that, and we're going to hold your hand all the way through. So I'm really excited about offering that to you as well. Again, if you want more information, make sure you get on that database, because that's where we keep you informed of what's going on. Other than that, I hope you have a fantastic week. Remember to put that sun cream on, because it's jolly hot out there. It's about 27 degrees today. I'm going to get some sunshine this afternoon. I'll see you next week. Bye.